guys, this is me Radhika Sharma, and in today's vlog we'll be discussing the crypto crash of 2018. Click the subscribe button and press the bell icon for latest updates. Okay, so guys, before we start, this is not the first time that we are experiencing a crash. Since January 2018, Bitcoin is struggling with a price range of either between 6,000 to 7,000, and sometimes it used to bounce back to 8,000. The same alternative digital asset that was once trading at $19,000 is now struggling to find a support at even $6,000. What are the reasons and how the crash happened and what's the future outlook will be the most important parts of this today's video. Guys, before we start discussing crypto market, the outlook, the dynamics, let us have an outlook on a view on how different stock markets, currency market, commodity markets are behaving. So going to the Bloomberg website, if we check out different stock markets, then we'll find out that everything is trading in red, starting from oil to the stock markets to the commodity. America specifically, all the exchanges are trading in red. Dow Jones is trading with a net day-on-day change of 253 points. S&P is trading with a day-on-day change of 28.9 points. Nasdaq Composite Index is trading with a day-on-day change of 111 points. This index is quite important because Nasdaq Composite Index mainly comprises of tech stocks. So if tech stocks including Apple, Facebook, Skype all are witnessing a bloodbath, then the ripple effect should be seen in the crypto space as well. The reasons are quite simple. As Fed is improving the rates, is hiking the rates, it is making US money markets more attractive. And with the trade war happening currently between USA and China, both the countries are struggling to maintain their economy and to achieve their growth targets, which are quite uncertain to achieve now. As a result of this, the most dynamic sectors, the manufacturing sector, service sector, and tech sectors are experiencing a bloodbath. And if we recall, the US markets are mainly led by the tech stocks in today's era. So if the tech stocks are down, it basically creates a negative sentiment in the markets where steel and aluminum sector and construction sector are already witnessing a downward cyclical trend. So this in together is pushing the stock markets of USA in the red zone. Speaking of the Europe, the scenario is not very different from that of America. The Euro Stock Exchange, FTSE, DAX, and CSE, IBEX all are trading in red, and the reasons are some are linked with the same reasons as that of trade war, while Brexit is also another leading concern that is happening in Europe, while the turmoil that is happening in Turkey, the differences and the increasing differences between the Germany side and the France side are also quite evident in the stock markets as well. Speaking of Asia Pacific, the things with S&P still trading in red and the Nikkei although are in green, but if we see the 1 month return, then all these markets are in red, and the 1 year return of all these markets are in red. So this is the episode that is happening currently in the stock market. If we see the energy side, then the WTI, Brent crude, natural gas, everything is trading in red, and the reasons are upcoming OPEC meeting which is happening which is due on December 6th. Guys, the meeting is important, but more important the thing is about the Donald Trump's tweet whereby he is pushing and asking Saudi and Russia to cut down their production. Because not to cut down their production, Saudi Arabia and Russia before that entailed and pointed out that they might go with the production cuts as they want to maintain oil above $80 per barrel. However, Trump in opposite and in contrast of that wants oil to be on the lower side, which is good for the US economy and for other economies as well, but might not be a very positive signal for the oil exporting countries. However, the meeting is due on 6th December, but the signals and the sentiments are quite that Saudi and Russia will comply with Donald Trump's, and the oil prices might be on the lower side for 2018 as well as 2019. though I am not an oil analyst, but I'm just laying out this foundation to help you guys to link between different stock exchange markets and different other markets, is how they are translating and creating a ripple effect in the crypto market. The crypto market is a bit different, but we cannot neglect that the ongoing recessionary, the feel in the air and the recessionary environment that has been created and been discussed in different journals like Wall Street, the Financial Times, we cannot neglect that, and the feel is already in the air. So similarly, crypto is not so different. Today, Bitcoin uh, saw a downturn, and it tumbled from its biggest resistance of 6,000, biggest support of 6,000 2018, and is currently trading at $5,200. I'm not a technical analyst, but as far as the things are going on, 5,200 seems to be the main support for this, immediate support for Bitcoin. And if it breaks down, most of the technical analysts, as per TradingView and as per different Telegram groups, suggesting that the next support will be $4,900. Okay, so what are the reasons for the crash in crypto space? The first thing is the bad press. Whenever I have never seen in my crypto career any single article posted by Bloomberg that is in positive. However, in contrast, whenever Bitcoin uh, sees a tumble down in its prices, and whenever it breaks the 6,000 support level, Bloomberg always publishes something or the other related to negative, to create a negative sentiment in this space. So bad press, also not other conventional newspapers and publications are also not so different. We have very few reliable sources in this crypto space who are actually putting in their time to create content, to make the content interesting, enticing, bring up the numbers and make the valuation so attractive. So this is the loophole that is creating panic amongst the investors, as people don't know where to read and how to read. So in turn they go towards the conventional side of the publications, and whereby all they see is the negative sentiments being out there. Second is the inadequate security. Till now, we do not have any financial model to justify that if Bitcoin is trading at $5,200, then is it so? Is it the justified price? Is it undervalued? Is it overvalued, or what? The only thing that can determine Bitcoin's value is its future use cases. If the use cases can generate enough revenues, and if we can estimate those revenues, then we can might discount it back, those cash flows, and come back towards its price that at which the Bitcoin should be trading. However, since we do not have any of such model, we do not have any industrial PE after using which we can determine Bitcoin's value. This again creates uncertainty between investors, and they find it very awkward to justify and to put a justified tag on Bitcoin's price. The third is the stringent regulations. Since 2018, we have been hearing that the ETFs will come, and the SEC, Security Exchange Commission of USA, will approve the ETF, and the crypto space will see a revolution, the mass adoption will happen. Though nothing of that sort has happened till yet. The next meeting of the ETF is due on February 2019, whereby major decisions on the ETFs will be due. We do not foresee any of the immediate revolutionized decisions that can turn around the industry. However, we do see that some regulations will come in effect, and those are good for the industry and for the investors overall. The fourth is the delay in the ruling of Bitcoin ETF. The more the delay will happen, the more panic will be created in the market, some by the traders, some by the manipulators, and most by the exchanges. So, guys, these are the few reasons as why the crash is happening. Part of the impact is coming through conventional markets, part of the contribution is coming through traditional publications who are creating a negative sentiment in the minds of people, and some of the contribution is coming from technical charts, whereby $5,200 was the major and immediate support which Bitcoin has broken today, and we see now the immediate support to be at 4,900. As far as the last part of the vlog is concerned, which is the outlook, crypto and blockchain is the reality. It is the future, and nobody can deny that. It is the reason why IBM, why JP Morgan, why Morgan Stanley, and all the big companies are getting into this blockchain and are trying their ways to enhance their footprint in this region and in this specific technology. However, we see that 2018 to be a little tricky year for Bitcoin. From 2019, once the ETF will get approved, or at least we'll see some signs of positivity and some regulations in place, maybe some exchanges will see stringent regulations and some might default. Though that will be the bad times, but that will be for a very short period of time. And after that, we are very hopeful that once DApps will come in place, once the mass adoption will happen, and once the actual usage of these coins, these apps, these global payment processing systems will come in effect, this will be the time then BTC will boom. And that boom will be sustainable and for long term. Till then, guys, take care and do follow us. Press the subscribe button, click on the bell icon for more updates. Thank you. Take care. Bye bye.